Hello, good morning, and welcome to another edition of a dive into the market with Legacy Capital, where we have a breakdown of the key levels we should be looking at as far as trading is concerned. This week, we'll be looking at the high impact fundamentals. Secondly, we'll look at the XY, we'll look at XAU USD, that is gold, we'll look at GBP USD, and of course, we'll round off with Euro USD. If you are just joining us for the first time, don't forget to subscribe to our channel. Don't forget to like the video, and of course, don't forget to comment, and of course, share the video so that it can reach many in need. Thank you very much. Let's dive into fundamentals. This week, as far as the high impact news is concerned, on Monday 28, we'll be having the federal election in Canada. So there is a high probability that it will be affecting the Canadian dollar. And on Tuesday at 3 p.m., we'll be having the JOLTS job openings that will be affecting the United States dollar. And don't forget, if the actual is higher than the forecast, it is good for the dollar, and if it's lower, it's bad for the dollar. For now, the forecast is 7.48. So we are expecting to see how the actual will look like. On Wednesday at 2:30, we have 2:30 a.m. we have the CPI for the Australian dollar, and at that same 2:30 a.m. we have manufacturing PMI for the Chinese yen. On Wednesday, we also have the German prelim CPI. We also have the ADP non-farm employment change. We have the Canadian dollar GDP, and we also have the advanced GDP for the dollar on Wednesday. And on Wednesday 3 p.m. we have the core PC price index for the United States dollar. On Thursday, we have the Bank of Japan policy rate, we have the monetary policy statement, Bank of Japan outlook report, Bank of Japan press conference. Of course, that will be affecting the Japanese yen, and we have the unemployment claims that will be affecting the United States dollar, and the ISM manufacturing PMI for the United States dollar. And on Friday, we'll be having the average hourly earnings, and of course, the non-farm employment change on Friday, NFP Friday. Please be cautious. If you are not a fundamentals trader, then you should definitely stay away from the market on Friday. And on the same Friday, we have the unemployment rate, and all at 1:30, of course. So that's what we are expecting next week for the fundamental news, and we should know that next week we have NFP news, so we should be very careful. The market might move driven more by fundamentals, so we should be more careful. From there, the next thing we are to be looking at is the XY. So last week we started the week with this consolidation within these green lines, and our anticipation, we were anticipating that it will shoot down, then test this level. Of course, you can see that it actually tested the level before retracing. So our idea or our trading bias was to see that the market leaves this area, breaks down to test this daily key level, and maybe retrace from there. And we can see that the market actually got to this level, it retraced back from there, and it is within this zone. So what should be our expectation? Are we expecting that the market will push further, or maybe the market might retrace to break this zone? Let's move with the help of candlesticks. So this week, price closed at 99.587, and as price was closing, the market has proven to be bullish. So after testing this daily key level, what happened? The market created a bullish engulfment at this level. You can clearly see that we have a bullish engulfment at this level. So what should we be expecting? We should be expecting that the market should push further and actually clear off liquidity within this zone. So what we should be expecting this week as traders is to see that, okay, maybe the market will definitely keep on, or the market will buy more. So this will be our expectation this week, to see that the market move to this area, maybe retrace a bit, then clear off liquidity from there. So this is what we are expecting, and all of this is because from the key daily level, the market created a bullish engulfment, telling us that the bulls are in the market. Nevertheless, the market could still get up to this level. The market can leave from here, maybe fail to break down this area that has acted as resistance, then drop further to go beyond this daily key level, creating a new low. So we should be open as far as the daily time frame is concerned with the XY. Then looking at the 4 hours time frame with the XY, can clearly say that for the market to push to this zone, the market will obviously have to take out this resistance. If the market takes out this resistance and move over to this zone, it can retest the resistance just as we have predicted from the daily time frame and then maybe break it. Or the market push over, test the daily resistance level, then drop down. So we have to be absolutely cautious, because right now DXY is giving us that vibe of I can buy or I can sell. So we need to be patient and wait for the market to properly give us a direction of what we should do, and we hope that by the time the market will be opening on Monday, we will see a clear direction, or we will have a clear directive from the XY. When we look at the daily time or the 1 hour time frame, we'll notice that the XY is still in a downtrend. The XY is still in a downtrend. We have had a change of character here, but the market has not tested back this zone since the change of character. We had a change of character, we had a double top, 1, 2, so telling us that the market will buy. So obviously now, as the market is buying, the market must keep on buying. The market must first of all break this resistance we have at this level and break this other resistance we have at this level. So as market opens tonight, what you should do as a trader, you should wait to see the reaction of the market as far as this first resistance at the level of 100.016 is concerned, and secondly, you watch out what happens at the level of 100.316. If to say that the market will break it, then you know that okay, the market will keep on buying. If the market fails to break it, then we should know that the market can retrace back, and finally before the end of the week, the market might possibly take out the the support at 97.91, creating a new low as far as this trend, the downtrend, is concerned. So we should be more vigilant and we should be more watchful as far as the XY is concerned. On XAU USD, if you look critically, you will notice that on the daily time frame, the market had been selling, or the market had printed a series of sell candles. Market had printed a series of sell candles. On the daily time frame, we had this sell, we had this, and finally the market ended on Friday trying to sell, though rejecting this zone. But when you look at the 4 hours, you see something a little bit different. So what should be your take on XAU USD? You notice that XAU USD has constantly been buying, and we cannot conveniently say that this short sell, this sell from the level of 34.96 or 34.96, sorry, is actually an indication that sellers have stepped in and buyers have stepped out. No, we cannot say it. It can possibly just be a correcting the uptrend. So what we should be expectant of is to see that okay, there is also a probability that XAU USD keeps on buying this week. So what should you take, or what should be your lookout as a trader this week? On the 4 hours time frame, what can you read or what can you see from there? On the 4 hours, it's clear that you are seeing that XAU USD is actually on a zone that has been acting as a support, and on this support we have one bottom and we have the second bottom, and as this second bottom is being created, you can see clearly that the market has created a hammer, telling us that buyers have set into the market. So we have a double bottom here, or a W pattern that the market has provided to us. So what we have in this case, we have this to this level, we have this, and now the market is trying to push up. So obviously we know that okay, there is a high probability that with this the market can come to this level to create us the W pattern. But before the market gets to that level, one thing we need to understand is that the market must take out this zone. If the market fails to take out this zone, then it is impossible for the market to get to this level. So this week, as the market opens on the 4 hours, what you should be expecting as a trader is to see that the market pushes up to this level and maybe retrace a bit, then breaks and then move up to give us the W pattern we are waiting for. If the market fails to do that, then you don't go in for a buy. But if the market does that, you know that okay, there is still a high probability that the market will create an all-time high, and you understand that the correction or this sell that we had from the level of 34.96 right down to the level of 32.56 is just a mere correction and not a change of market direction. So you should be more watchful as far as XAU USD is concerned. Now let's vividly look at the 1 hour time frame. On the 1 hour time frame, what you see is that the market has been dropping right down from this level, and even at this level the market has been threatening to buy, and you notice that the level that we trace on the 4 hours as a resistance or as a resistance level has acted as a resistance on the 1 hour 2 times. We have one time here, we have one time here, we have the second time here, and this will be the third time the market is going there. So momentum is actually building. So there is a high probability that at market opening we might see a gap to the upside, and maybe obviously momentum might build up and break this, and the market might keep on be buying. So what I would advise that you should do as far as XAU USD is concerned is for you to wait for the market to take out the level as at 33.73, and then maybe retest the area of momentum. Then you buy from there and move up with the market. In other words, if it fails to do that, if the market retraces back to the level of 32.61 and then take out the level, then you should know that the market will keep on be selling. So that is that for XAU USD. On to GBP USD. If you recall very well, if you actually followed the last video we made or we designed the video when the market was at this level, and what was our prediction? We predicted that at market opening there is a high probability that the market will push up to the daily key level, which was at this zone, then retrace back from there, and you saw it played clearly in your eyes. The market pushed up on Monday, and on Tuesday the market pushed down to retest this level and has been struggling to push back from there. So now this is what we have as far as our daily chart is concerned. So this week we should be expecting to see that since the market, as already there is a bullish engulfment here, we should be expecting to see that the market pushes up now, gathers more momentum, takes out this level, and maybe retrace from that level. So the market needs to push up and then maybe move further from that level. If the market fails to do that, if the market pushes from here, then retest this level for the second time, then move and take out this level, then we should be expecting to see a further drop in the momentum. So we'll be having just two things in our mind this week: to see that the market push up to this level and then breaks the daily key level at 1.34278, or the market moves to 1.34278, then retrace back to break the level we are having at 1.23583. If the market breaks this, then we expect that okay, there will be more sellers momentum, and if we see that sellers momentum, what we should be expecting is to see that okay, the market retrace back, retest that level at 1.3258, then retrace from there and maybe further drop down right down to the level of 1.27370. That is if to say that if the market takes out the support level at 1.32437. If the market fails to take it out, then we should be expecting to see the market moving up and possibly taking out 1.34278 and definitely moving up right up to the weekly resistance level, the weekly key level, which is 1.36584. So that is what we'll be looking at as far as the daily time frame is concerned for Great Britain Pound USD. Then on the 4 hours time frame, what should we be expecting for Great Britain Pound United States dollar? On the 4 hours time frame, we already noticed that the market had actually retraced to this level and rejected this level with a power wick. If you look critically, the market rejected this level with a power wick, and the market has been building up. Momentum has slightly taken out taken out this last higher low, and now the market retraced a bit. So there is a high probability that the market will push up, and maybe we'll see the market getting above this level. So we should be expecting to see the market get above this level. If the market gets above this level, retrace back and maybe test this, the market should be getting up to the weekly key level. If not, if the market retrace and then take out this low, the liquidity that is here, then we should be expecting to see a further drop in the market. For now, I think that the most probability of market movement will be to the upside, because the overall trend of Great Britain pound United States dollar is in an uptrend. Checking the 1 hour time frame, you'll notice that we'll not see anything completely different from what we already saw on the daily and the 4 hours time frame. Here we know that the market only retraced because of the double top. The market has tested this zone, which of course is a demand zone, and from there the market has been buying and creating higher highs and lower highs, moving towards this level. So what we should be expecting is to see the market further push up to take out the daily and probably test the weekly level this week. So that should be our expectation for Great Britain pound United States dollar. From there, we should look at Euro USD. With Euro USD, you will notice that it has been on a constant rise, though there have been some corrections. It has been rising, it has been moving. So what we should do, what we should try to do here is to try to see if we can picture even the daily or the weekly key level. With Euro USD, you notice that we have a weekly key level that the market is testing. And on this weekly key level, the market is testing this zone. And what is worthy of note is that the market has attempted to break the zone here, and the sellers that push the market down try to push it back. So what should be our expectation? The weekly time frame, this is our expectation. So we have these key levels, they are quite much. We have this that the market has attempted to break, so there is a possibility that the market can push further, break it, and come right up to this zone, and maybe possibly move right up. That's what we should be expecting, or that's what can be the possible outcome of the market. That could be possible too. So on the weekly time frame, we notice that we have a good number of key levels, or better still, we can as well have the market retrace and then test this zone that has acted, or the zone that the market has just broken. Because if you look at it, the market was in a consolidation. If you want to look at it critically well, you will notice that the market had been consolidating for quite a long period of time. Understand that there had been a consolidation within this zone. So there is a possibility that we could obviously break and retest strategy. If you recall very well, we could have something like this. We could have the market retracing to retest this, and maybe moving back to this zone and retracing, and then finally breaking the zone. That's what we should be expecting as far as the weekly time frame is concerned. If we move to the daily time frame, all we can say, or what we should be expecting on the daily time frame, or what we should be seeing there, is to see momentum move higher. The market can possibly open, then push out, take the liquidity that is lying down there. In taking out this liquidity, is taking it with the sole objective of testing the consolidation that we saw on the weekly time frame, and it will push from there. So the things that we should be expecting to see this week as far as Euro USD is concerned on the weekly and on the daily time frame is to see that the market retrace and take out the consolidation that we are having at the level of 1.12713, then comes and then activate a buy maybe around 1.11863. Then from there it pushes up back to the level of 1.15153, and then there could be a slight retracement based on structure, then to gather momentum to move up. That's what we are seeing from the daily time frame. As far as the daily time frame is concerned, we are seeing that the market has actually broken the consolidation and is telling us that it's time for more bullish momentum to set into the market. And of course, don't forget this NFP week, and a lot might be happening. On the 4 hours time frame, as far as Euro USD is concerned, you also see that the market could maybe drop down a little bit, then take out, clear out the liquidity, then test this zone, or the market could just push up and test the weekly key level that the market had attempted to break and maybe push further from there. So be watchful, stay glued to your PCs, and ensure that you trade with adequate risk management. Good luck. Thank you very much for watching.